Okay, the support and the resistance remains the same from yesterday on the euro dollar. You got 596 and 686 that's bullish, and overall is counter trend. And I'm not placing that much emphasis on this stuff. It's more shorter term, but we'll work with that in the next couple of weeks. But for right now, we've got support of 596, resistance at 686. We talked about that yesterday, the significance of the 686 here. And that stopped the market just about to the pip. And we talked about this market having to pull back, probably closer towards the 16s or 10, which is where it ended up going to. I mean, we went a little bit lower, but our support remains the same, which is the 596. And I think that any pullbacks towards the 596, 92 area are going to be good for a long. And I think we talked about this yesterday that they're going to make it. I believe they'll eventually get here to the 716. And yesterday, the way it was holding up here, it looked like they might try and take a foray up to 716. But I'm thinking, in the overall bigger picture, we discussed that. If we see a reasonable dollar correction, that should allow us to go in and make it up to the top of this zone, this 865, this bigger zone. But before we get there and we goose the stops or we hit the stops above the 672, I don't think they're going to stop 30 ticks later, or actually 40. I think that you're going to make it up to about the 758 before you see any real pushback. And we're going to take the most recent. Let's take a look at the most recent range here, or range completion, I should say, where the 127% extension may be. That will come at 742. So let's go and mark that off. So we got here with the 127% extension, which actually come in very close to what we were talking about, that 758 area. So let me set right here where we stand here. So I think they'll get past the 716. I mean, if they take out the stops here, just like we talked about the dollar yen a couple days before, they're not going to stop just at 716. I mean, I think that's where we're going to go to. You'll see a pause. But before we see, and I'm pointing out to the guys and gals, is before you see a more marked correction, I think we'll make it up to 758. And that would confluence with this 127% extension of this recent range, and that is a very significant range here. This was the high, the Christmas, right after Christmas, the thin liquidity. Okay, fine, but then look at the reaction and the new low. So that is very significant range. This range. So that 127% extension puts us right here. Looks like it might even be. There we go. Actually, it says 740, so we'll mark it off a little bit closer for the perfectionist, those that are. So And this actually comes in at 50. So that's what I think they're going to, towards the 758. I think that they'll eventually be able to break it higher. Look, the dollar's been strong for a long time, but you have to look at things, at least the way I see things, you have to look at things in context. So you can see how well the euro, when it was really under assault and people were saying it was going to parity and below parity, how well it held up here. And if the wheels were really truly going to fall off the caboose, it was going to be right here, right at the beginning of the new year, after they skunked out a lot of people here. So we just made a very minor marginal low. You remember at the time we talked about support being there at 345, and we got down to 339, and then very nice return. And now we've come back and tested this. Looked like, okay, yeah, everybody got faked out. We came back to 467. We talked about this. We had 450 as our 61%. The low was what, 54? So that was off by 4 pips. And we've made this run up here. We talked about the 686. We hit that or missed it by 1 pip. So if we're going to take out the stocks, we're going to go much higher, and I think we'll get to 758. Now, overall, in the bigger scheme of things, I think there's a possibility that if we do get the reasonable, decent correction, eventually we'll come up here to 865 and take out those highs. But that's for a little bit later time. But for now, this is how I see it kind of playing out. Any pullbacks to 593 need to be bought. I think this is going to be a buying opportunity. So our bias chart remains the same from yesterday. 596 is support and 686 is resistance. Obviously, they could pop it on weaker retail sales and maybe make a run up here. But for right now, I'll still stay with the 686 for now. Let's go and take a look here at the dollar yen. We talked about this days ago. We've been seeing that our overall target was going to be 1439. That's when it was hanging up in here. And I said, look, before it's all said and done, I just think that we're going to go to 1439. And we did make it there. And not only did we make it there, we took it out by just a few pips. And look at this awesome rally off of that 1439. I've been talking about that actually since last week, 1439. So now we are here, and we talked about earlier in the week, confluencing with the 114, which is the 23%, and support we talked about down here, and we saw the nice pop back. My thought is so we're going to have to come down to 1288 before all said and done. If we're going to tie it all together with a dollar correction, all things being equal, I think we're going to have to come down here to this 1288. Now, 1354 is 161% of the recent range here. You know how we talked about the euro? Well, the recent range on this one, take a look at this. You see, that's 161% of this recent range. But it didn't have the wild swinging run that the euro did. I think that we're going to take out 113 and we'll test this area, and I think that this is eventually where it'll go to 1288. But for the short haul, where we stand right now, we've got resistance remains at 1482 and support at 1333. Right there, you see that? I'm just going to stick with that. I mean, obviously, if the retail sales comes in, we probably should go and move this higher. It really should be closer. If you're looking for the bigger move, if you're looking, right now, if you're day trading, I think that resistance still holds up, this 1482. If you're looking for the bigger play to 1288, and you're going like, well, let's say the retail sales comes in really strong and the dollar pops. Where am I going to go in and run to? I mean, where should I start to initiate if we think that we're going to get a big run to 1288? Well, then I think that comes in right here where this closes. You see right there, which is basically 1550, but a hair right there. You see that? and that will come in at 1541. So if you're looking for that bigger move, let's go mark that off. If we get a strong retail sales, this would be a good area to initiate shorts. Any run towards that area with an overall target, all things being equal, of 1288. That would coincide with this low test here and the high area of this zone. So I like 1288. And so we get a good strong retail sales, we pop up. Any moves to 1540 should be faded. Let's take a look where we stand here with the cable. Cable's been all up and down. And we saw the story, hang on a moment. That's when they're going to go on and, when we mentioned about the Reuters story and the volatility that we've seen. So we jumped all over the place. At this point, I have to say, support would come in here. I'm looking for it. What should be 2072. With resistance right there, 2282. On the cable. Now, we talked about the Aussie dollar. We'll move into that quickly. Now, I'm not, like I said, I'm not a big cup of handle kind of guy. I don't claim to know, this pattern that well. But, and really, if you look at it, it looks like it's a little bit, the bull should be right here. But looking where we're at right now, to me, it looks like plays in here with a projection that comes in at 75, 72. Now, the Aussie dollar has held up better, has fared quite well against the dollar. And part of that has been the commodity plays. We talked about the huge back-to-back 3 months of strong coal sales, the strength in the gold that we've seen. All this has aided and abetted the Aussie dollar move. And it's a trendy market to start with. So I wouldn't think, even though we've got resistance here at the 75.26, the top of the zone here, and yesterday we marked it for 75.45, I think we can get past that. This 75.72 makes a lot of sense, which would still take us about another 60 pips higher. So this is where I see this potentially run out of gas here. Not run out of gas, but slowing down before we see the market for more definitive pullback. But for now, we've got a resistance on the Aussie dollar range, 75.45 and 74.25. That's right here, the 75.45 right here at the 61%, and the 74.25 is just below the 74.30. You see right here? It's touched, so we can come in here. For right now, that's the way I see it. 74.25 at this point is still going to be 65 pips away. But that, to me, that makes sense coming in here, just taking out that low. Let's go and take a look at the Kiwi. And the Kiwi, we have 70.11 and 71.57, and I don't think this has changed at all from yesterday. Here's our 71.57. Here's that level, and this is confluence, and we showed this yesterday with the 78% of this move here. I think that the Kiwi is certainly not as strong as the way the Aussie dollar has been, but I think that the Kiwi, if we're going to see that sustained dollar weakness over the next, let's say, week to 10 days, I think that we can go on and make it up here to the 61%, which would be 72.48. I'll show you where I'm coming up with that from. This significant high. There. See, the 61%. I think with the sustained dollar, if we're going to see that play out, that should go, and you can see we have a bias pivot at 72.25. Notice how once we got above it, it was all blue skies ahead. They tested it multiple times, and not only they tested, you're seeing sharp reactions off of those tests. So to me, that's a bias pivot. You see, the same thing here. We come all the way down. Once again, a sharp reaction off of that. Once we lose it, then the wheels fall off the caboose and we're heading south of the border. So this, to me, is going to be a bias pivot, 72.25, and then we'll overshoot up here to 61%. Now, for right now, on the short-term basis, yes, this is going to remain the same. 71.57 is going to be resistance, and we've marked this off as right in here, 70.10 as the support. So let's go move into the dollar CAD. I'm trying to get the most of the majors done before we go to break, and then when we come back from break, we'll take a look at gold and bonds a little bit more in depth to get prepared before the retail sells. We had resistance. It probably was a little bit low at this 31.31, the top of the zone, but obviously we made this run up here. I mean, we were extremely oversold. You know, honestly, I probably had the resistance a little bit too close here at this 31.31. We already, you know, we came back quite a ways, but that probably was a little bit too low. Maybe we had to have it here, which I've updated this for 31.71. Look, the market's oversold. You know, it looks like the dollar will go through a bit of a correction. Probably why I had this so low. But obviously a lot of it has to do with the oil market. And we'll take a look at that later. But for right now, we're just going to keep it simple in the dollar CAD with resistance at 31.71. And right here, you can see where we have our support, the 30.32, which was the bottom of this zone. Which, like I said, we had it here at 31, which probably wasn't realistic considering how oversold it had come. And this probably made more sense, but the support's going to still be here at 30.32, and that resistance is back up here, this 31.71 here on the dollar CAD. We'll take a look at the dollar Swiss. This one hasn't changed at all. It remained the same. And yesterday, and it played out, you know, quite well with those resistance and support levels. We had 0.0050. You remember we were on the air when we were talking about that. We were at 0.0058. Remember, and we marked up the resistance, still staying the same at 0.120. We can take a look how that held up. We're making a move towards this area again, but there's that 0.0120. So we were down here, remember, right here, and there's our 0.061. We talked about the 0050 right here, just a little bit below. So we bounced off of that nicely, because remember we were talking about fading the euro, and we thought it was overdone at the time, because this trades to a certain extent close to the way the euro does, almost like an inverse relationship. Why I pay more attention to the dollar Swiss as opposed to the cash dollar index. And we said we're going to keep the 0120 as resistance. The 0120 is our bias pivot. Okay? And that kept the market in check. I mean, we can take a look at what was the actual high on this, and it hit it several times. 0113. And there was our bias pivot up there. So we'll test it again here. And like I said, I expect the dollar to go on and correct further out, which correspondingly I think that eventually the euro could get to 758. And there's still a play for a bigger move forward, but for right now, I think that the dollar is going to remain somewhat under pressure. We'll see how the retail sales comes out. They're expecting good retail sales that may allow the dollar Swiss to pop back up, may also allow obviously the euro to go and pull back closer towards maybe a test of the lows, maybe towards that 6. We have the support at 596 on the euro. And we already mentioned the dollar yen, which continues to be weakened here. I think, as I mentioned before, I think we're going to have to make a move down to 1238. Like I said, if we get a strong retail sales, and they're expecting good retail sales, here it probably gives you a little bit of a flavor, a tone, in the sense that they're expecting a good retail sales, but look how poorly the dollar yen's trading. You would think, okay, they're expecting good retail sales, it's probably going to come in good. You think they'd be trading closer to 15. And say, okay, on that good retail sales, they'll pop it up here towards that 1540 we were talking about. And it's staying weak. It's like, I don't care about any good retail sales. So the market technically is poor in its reaction. That's why I think that eventually we're going to make a run to this 1288. We talked about the 1439. It worked quite well. Been talking about it actually since last week. Got down there, saw a massive rally of almost 100 pips. From these lows, and then turn around, fall back, and just get beyond it, 114 being the 23%. And it just feels like we're going to have one more test before we get some sustained strong buying, which I think will take us to 1288. Then we'll see people start to step in. So that'll take us to the top of the hour. We'll come back and we'll cover the other markets. And thanks for joining us here on the Morning Edge.